Good afternoon and welcome to Lunchtime Series with Kevin, where we add value to people's lives, happening every day at 12 on eBizRadio.com. As always, a marketing and communications expert, Craig Page-Lee. Craig, how are you doing?
I'm great, Kevin. Yeah,
you would
thanks.
Think after so many shows, I would say marketing communications expert, like fluent.
Yeah, but remember how many shows you're doing, so yeah, it's understandable.
Craig, so we had a great conversation last week where you introduced us to some concepts of social good and non-profit organizations. What impressed me the most is the fact that we are seeing major brands support the initiatives. So not just making financial donations anymore, but actively participating at a ground level with communities to drive change and supporting their own staff and initiatives that align with that. So,
yeah, sure.
But before we jump into it, don't you want to give us some sort of a recap on our last show and what happened last week?
Great, Kevin. Yeah, so yeah, we covered a hell of a lot, and quite an important topic at the end of the day, and absolutely, we mentioned a few really key big global brands that were making a difference in respect of these social good programs. Some of them being the likes of Ben & Jerry's, Body Shop, SAS, and Colgate-Palmolive. And obviously, I've just listed those because those are probably brands that have more resonance with South African audiences. But closer to home, we mentioned Pfizer South Africa, Carling Black Label, Isuzu Motors South Africa, and of course, the wonderful collective efforts of Discovery Health and Vodacom during the height of the COVID pandemic. But yeah, that said, the tips that I really wanted to share from last week relate specifically to how nonprofits or entities structured for social good programs can use social media to promote themselves by following just 4 simple, easy steps, Kevin. And by adopting these steps, any such organization should be able to position their cause, raise awareness, gain support from the specific audiences they target. So just for our listeners again, the content is care of an article titled Social Media for Nonprofits, 11 Essential Tips for Success, and was published on the hootsuite.com by Katie Sale on 21 September 2020. And these tips go as follows. Number 1, promote awareness. Education and advocacy is obviously one of the first steps to affecting change. So share your nonprofit's message on social media, communicate your mission to new followers, and spread word about new initiatives, campaigns, and issues within your community, and connect with the people who need your support. And you'll hear more and more of that come out in many of these points. Build communities, grow your base and recruit potential volunteers, speakers, advocates, and mentors. Social media can be a powerful community building tool for nonprofits. So create channels and groups where people can engage, share resources, and stay informed about issues that matter to them. Nice point here. Inspire action. Rally people behind your nonprofit with concrete actions that they can take to support your cause, whether it's on the extreme end of promoting marches, protests, marathons, other events. Encourage followers to call politicians, pressure or boycott bad actors, or simply adopt a more mindful behavior. And of course, fundraisers to collect donations. And lastly, on this point, share your impact. You need to show people what your nonprofit can accomplish. Build momentum by celebrating those victories, big or small, and let your contributors know that you value their contribution and see how their help has made a difference. Share achievements, gratitude, and positivity, and you'll attract more support down the line. And the key thing here is, in terms of let people know how their contribution has been valued, talks to the point you make about there are organizations that are supporting initiatives that their very own staff support. So where staff go in, make an effort, they match and pair that effort by either contributing financially to the value of that input and effort, or actually roll up their sleeves and get involved with themselves.
Yeah, absolutely. So I just want to reiterate, guys, if you have joined us and you are listening in, this happens every Thursday on eBizRadio.com at 12 o'clock. So check it out. The marketing show happens every Thursday at 12. But Craig, we've been sharing some really great stuff, and last week was the social good and non-profit organization. What are we expecting to chat about today? Because part of what's interesting about having this, that's been my interest point to it the whole time, is marketing as a subject is so diverse, and you've managed to pull it all together, from mental health to nonprofits to going green to, like, there's so much information that we can take from these conversations. So what are we talking about today?
Yeah, something quite different, but interesting to see. One of the companies that I'm going to reference in the latter part of the conversation actually has a nice social good aspect to it, and we'll share how they deliver that. But yeah, so I've been doing quite a bit of reading on innovation and developments in the financial services space, Kevin, and particular area that interests me is to see what banks have been doing to improve customer experience journey and how they've been using technology to support customer needs. And we've seen a lot of that, particularly through the COVID pandemic, when, you know, a visit to the branch was out of the question, and a face-to-face banker assistance became almost a non-event.
Yeah.
So with that in mind, what I'm wanting to do is just have a look at some of the areas of digital innovation and banking. And believe me, next week's conversation is going to be a build on this one as well, because it's such a vast topic. But really wanting to look at the difference between traditional banking and this word that's just the hot word for the current day and time is fintech. So, you know, what's happening between traditional banks, what's happening in the fintech brand space, and how these two can actually come together to create greater value for the financial services sector, because they both have incredible roles in their independent states, but when they come together, there's real power for the sector.
Yeah, you know, and just to blow my own horn here for a second, like fintech, when I first realized that banks had any kind of innovation, I think F&B was, you know, they started this with the voice of Steve on the radio ads, where they were really promoting the app and how you could do banking from an app, and I mean, like, that just, you know, it became the most incredible ad campaign. So, you know, it's interesting to hear like what are banks going to be doing, and how can they up the game here, because they have to be at the precipice of making, you know, their offering far better than anyone else's.
Yeah, and again, big up to F&B. They were by far the leader of technology, digital-driven banking in South Africa, and for me, they still remain at the forefront of that. You know, I've been an F&B client for over 27 years, and you know, I swear blind by their digital capabilities. So yeah, good on them. So let me first set some context, Kevin. You know, as we do for each of the programs, I like to share a few definitions that I find across the various platforms you look at, and yeah, looking at Oxford Dictionary, Wikipedia, a couple of the other sources, note the following. And some of this is quite obvious, but it's important to map it out again, because you'll see the interplay where it does come to play.
Yeah.
So a bank is defined as a financial institution which performs the deposit and lending function. A bank also invests money to build up their reserve of money. A bank allows a person with excess money, the saver, to deposit his money in the bank and earn an interest rate. Similarly, the bank lends to a person who needs money, the borrower, at an interest rate. And these types of loans can include home mortgages, business loans, and car loans. Fintech companies, on the other hand, are defined as financial technology, vis-a-vis fintech, that is used to describe how new tech seeks to improve and automate the delivery and use of financial services. So you can immediately see the segue and bridge into this particular space.
Yeah.
Computing programs and other technology used to support or enable banking and financial services. At its core, fintech is utilized to help companies, business owners, and consumers better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and increasingly smartphones. Fintech is one of the fastest growing areas for venture capitalists, Kevin. But here's another important point that I pulled from one of my favorite go-to sites in Investopedia. It reads, the most talked about and most funded fintech startups share the same characteristics. They are designed to be a threat to, challenge, and eventually usurp entrenched traditional financial service providers by being more nimble, serving an underserved segment, or providing faster and or better service.
Yeah. Somehow they openly just yeah, we're here to threat you.
Yeah,
and the status quo and challenge how we do things.
Absolutely, and it's, just there are definitely some banks who have understood that and have embraced that and forged some great relationships to leverage off that.
Yeah.
So with that in mind, let's start looking at what digital transformation in the banking looks like at the moment, Kevin, and see how developments in the sector talk to the definitions previously noted. So, referencing a really informative post on the printectgroup.com blog titled Digital Transformation in Banking, 7 Things to Consider Prior to Investing in the Next Big Thing, we read that embracing digital transformation in the banking industry is not a matter of choice anymore. It's a fact that shapes the future of all banks, whether they're doing it or not. And choosing not to adopt digital transformation practices may result in a bank being at a competitive disadvantage or risk losing customers. On the other hand, embracing this dominating trend comes with a set of key benefits. Number 1, helping to improve customer experience. A good example of this would be self-service channels. Optimizing processes in order to meet expectations of tech-savvy customers.
Yeah.
Reduce operational costs, and creating a forward-thinking profile for the respective.
I just want to I'm already a slave to this, because when you go to a shop and you tap your credit card, you kind of go, okay, I just want to pay for something quickly. Does it tap? I'm already at the point when a machine doesn't tap, I kind of go, what do you mean it doesn't tap?
Yeah. I'm so with you on that. Yeah. And and similarly, I get a point where I want to tap and go, but there's fortunately a safety limit on taps.
Yes.
Okay. And then you're buying your groceries or something, and it by far exceeds that, but you just don't want to hit that keypad again. You don't want any interaction with the tech, and you go, okay, you know what, guys, this is for my own good. And you just have to accept that. But yes, I'm right there with you. Yeah. So to that point then, Kevin, there's definite reference to that self-service and tech-savvy proposition, and they all point to how digital transformation does, can, and will influence and inform the customer journey. So to expand on that from those various sources I've read and referenced, it's obvious to note that banks have access to large volumes of data. However, being compliant, and we've picked up on this quite a bit in our discussions, is really one of the greatest challenges. But not just being compliant, but it's about how they use their data, how the data is structured, and how it's archived, really coming together as key challenges there. They also need to know how to work with the data, Kevin, and how to extract insights so they can use these insights to build their targeted communication strategies across the various audience segments that they target. And again, when we spoke about the e-com proposition, that was very much a key driver. So in closing on this section, Kevin, I want to just quote the end of the printectgroup.com blog, where it states that digital transformation brings meaningful changes from this perspective, making insights identification much easier and allowing banks to develop customer-centric campaigns. And really, at the end of the day, that's what all brands want. They want customer-centric campaigns that talk to the needs of the customer, that understand where they are in their life cycle, and deliver the right proposition at that point.
So, you obviously mentioned banking and fintech, but also expanded on the likes of the customer journey.
Yeah.
Taking this into these concepts into account, what will the banking landscape look like in the future? Like no more branches, fewer and fewer ATMs, new services. Like one of the things that, and it might not be this, but you can clarify. For example, Bitcoin, right? How people have moved into a Bitcoin online currency. And is that part of this kind of thing that we're talking about?
It's very much a reality of one of the areas of innovation. I haven't necessarily gone into detail of banks that are trading in Bitcoin, things like that. But when we get to some of the detail there around those key threads to watch out for, because it's absolutely going to be, if you look at, there's a listing on the New York Stock Exchange around the various cryptocurrencies. So the reality is in place. You walk into Sanford City, there's a crypto cash machine. So it's affiliated to various crypto brands, and you can withdraw from your crypto ATM. So yes, it is. There's a whole conversation that we could have on that. So I'm just giving it a brief. I'm no specialist in that space at all. But interestingly, on the parallel side to that is obviously blockchain.
Yeah.
So there's a real parallel drive between the two areas of technology in this particular sphere. So yeah, great question. It really
Sorry,
is. No, it is. And you know, Kevin, banks obviously need to reinvent their offering to keep up with customers' expectations. And obviously, you know, Bitcoin is going to be one of them, or is already one of them. And we all know that at this rapid change, technology is also actually influencing some of the physical aspects of banks, which I hope we'll get a chance to pick up on in a short while. But really, banks need to understand that customers want more remote services. This is driven by user-friendly technologies, because some of it can be clunky. But the user-friendly technologies need to add value to the customers and the banks themselves. But at the same time, must never lose that important aspect of the segment, and that is to ensure customer centricity. So it doesn't matter how simple your technology is, if you're actually missing the boat, well, sorry for you.
Yeah.
Or how great you are at customer centricity in terms of understanding the need state. When you deliver the technology that then messes that up, you failed on that side as well. So technology may well enable a myriad of benefits and cost savings, but to me, it's only valuable when the customer is still at the heart of the service experience and when all other needs have been met.
Yeah, absolutely.
So by adopting the following 7 steps that I referenced, Kevin, we see that banks will be able to adapt to their customers' needs and expectations in the digital by simply doing this: embracing mobility through intelligent mobile apps that not only provide account information or process simple transactions, but also engage customers through compelling gamified promotions, rich content, or letting customers share their financial goals, be it the likes of purchasing a home or saving for retirement, and being able to bring those intentions into the engagement conversation with the bank. Being up to date with digital innovation by keeping in touch with new technologies and trends, definitely learning from the fintechs in this space.
Craig, just on that point, sorry, but like, is that even a question anymore? Like, can we afford not to be digitally innovative?
No, so true. But again, I think the question as to what are the levels of digital innovation is digital innovation being able to draw cash with your savings account at the till point, or is digital innovation being able to integrate every single aspect of your life through an app that is reading on a virtual dashboard into an augmented reality space? And I think there's a paradigm to the extent of digital innovation. So if you're a low cost bank and you offer zero account service fee delivery like Time Digital Bank, what is your digital innovation? Well, it's a kiosk. You go to a kiosk, you do your biometrics, you put in your respective FICA documentation, and it issues you a card at the kiosk. That kiosk is in the forecourt footprint of the retail store that bank is now affiliated itself with, and there's an immediate connection with a brand of association where you can go and transact and draw from. So that's great digital technology.
Yeah.
It really is as simple as it may be. It really is. QR code, simple payments, snap scan, and those kinds of payment gateways, really quite simple in the function. So yeah, it's a spectrum.
Again, it ties back to, one of the very earliest conversations we've had is really knowing what the audience, who your audience is, what that need is, and how to innovate according to that audience. So
Beautiful.
innovation is great, but it's how are you using it for that audience specifically?
Absolutely. Get to know your customers better through big data analytics and meaningful insights, and that talks directly to that point. But involve automation where you can. Automation of workflows, for example, to increase productivity and customer satisfaction, but then also to start stripping out costs in the organization. Respond with smart digital solutions for customers to do-it-yourself mindset. These self-service kiosks, I'm a big supporter and believer of those, Kevin. Tablets in branches to allow customers to perform their transactions themselves and only ask for help when they need it, or for complex financial products. Rethinking the role of the branch by changing the habits, incentives, and overall experience of the people who work in and for the branches. And finally, just keeping focus on multi-channel services and human interaction, even in the digital era, Kevin. We know that human interaction plays an essential role in gaining customers' trust and opening the door for new banking experiences. And when we fail in building that trust, well, you've lost that customer in many instances for good.
I just want to, on that point as well, Craig, I don't know if you've been to some of the McDonald's who have that touch screen thing inside the McDonald's.
Yes.
It's great innovation, but it took us about 25 minutes just to make one order. You stood there kind of going, okay, where's the button? And, so they have innovation, but I don't think they have it down to a T yet. So it's a very fine line to kind of be innovative, but also knowing, what is time effective, what is really working.
I hate it. I absolutely hate it with a passion for everything you say plus more. So I go straight to the counter. Done. A simple tap, boom, finished. Off you go. And I just love interacting with humans.
Yeah.
So,
I mean, thank you. You've referenced a statement of rethinking a role of branches, which is really interesting. What can you tell us about this? Considering the fact that just about every main street and shopping mall has more than one bank represented, and in some instances more than one branch in the same environment. So, how is that going to change? Is it going to?
I definitely think it's going to change. And when we read some of the trends that have been spoken about, it's wonderful to see that affirmation. And yeah, geez, Kevin, there's some malls you go into, you've got two different versions of the same branch in one environment. Surely that has to be looked at from a cost saving point of view. So yeah. We know we're living in the era of digital transformation, and more businesses need to find ways to adapt their digital offering and leverage new technologies. And I think COVID definitely was one of the catalysts of forcing the hand on much of this and accelerating these trends. Because digital at times was the only means of communication and transaction between customers and businesses, and that in itself had a direct impact on the branches, and therefore we are seeing a new landscape for banks emerge. So yeah, Kevin, the organization has been facing challenges for some time now, as the conditions call for solutions that ensure end-to-end customer experience. And banks have had an additional challenge: the emergence of the new breed of financial institutions, which are digital only. Some of those being in the fintech space, and they operate from an entirely different business model. And despite the massive move to these digital channels, some human interaction is still necessary. So it's really trying to understand the balance, because it's important both for the customers and the businesses to ensure that the human interaction is there. But some banks can actually use the human interaction as a competitive advantage over the digital-only banks. There's definitely a place and a space for the human interaction relative to what that depth of service offering requirement is at that point in time, which a digital bank may never have. And, digital banks can also go to the extreme of just having bot-oriented communication, which really becomes cumbersome and clunky when you're not getting the answer that you want as efficiently and as quickly as you want. So you do want to be able to opt out of bot into human interaction over a telephone to get the answer and move out. So yeah.
And Craig, sorry, Craig, I've got lots to say to all of your points.
The challenge is, sorry.
No, I think that's also the one of the biggest mistakes that's being made at the moment is innovation's great, and certain banks are getting the innovation right, but the moving from speaking to a robot and speaking to pressing a button to the next kind of, go to this section or this area of the business to speaking to a human, that delay, I think that there should be some innovation in that, because that delay for so many banks still get that wrong. They, when you want to speak to someone now and you're kind of going, why am I still on the phone after 25 minutes, just waiting?
Yeah.
So innovation's great because they have the going, but the actual solving my problem, that's still not happening fast enough.
And it's not just the banks, it's the mobile operators, it's the medical aid companies.
Yeah.
They're all the same. You have to either exit and dial back 6-7 times to try and make sure you try another button, which hopefully fast tracks you to the end point as well. It's horrendous. I do agree. In a custom suite where you're in a premium banking, platinum banking, whatever it may be, premium suite, your first port should be, do you want to talk to a human, or do you want to go down the self-help option? Not go 6 steps down a self-help option and then end up with a human being. Yeah, and for me, that's where I think there's a bit of a way to go still for banks to really understand customer centricity and just get you to that endpoint as quickly as possible.
Yeah, absolutely.
But the key thing there, though, that's going to have an impact on banks changing their design, Kevin. So do branches get smaller? What do the layouts look like? Do they need to redefine the purpose of what they're actually serving in a way, and what products they're actually delivering for customers? And where does the suite exist for face-to-face to just going into the tablet, just going into collect a card? Is it through a self-help device? All of those things impact severely on the actual design of the space.
Yeah.
So there's also the evolving role of the ATM. ATM is the most fascinating technology for me. That the fact that you can walk up to a machine. Yeah, in the 60s, they were just really cash dispensers. Today, they're a computer in your hands that does also dispense money, and they can perform a full range of financial transactions. So, long live the ATM. It's well beyond just money withdrawal and deposits, and they actually contactless capabilities are phenomenal. You can stand at a machine using your mobile, using your wearables, never having to put your card in the machine. Fantastic. And that for me really is a big area of growth in the banking space, and that's the world of ATM. Yeah. And how they're going to enhance ATMs. Some ATMs are actually starting to implement augmented reality around the experience, and I'll expand on that later as well. So yeah, branch transformation is definitely playing a significant role. We're already seeing less branches. That's a fact. Okay. Yeah. In the future, it's going to be chopped to the bone. And I think, as I said, where we do see them, they're going to be of a very different setup and operational procedure. And the new bank branches will need to reinvent the entire space. So to have those separate zones for the different service offerings, 24/7 banking through the door into a safe environment, predominantly ATM zones that we see in some environments, but obviously advanced ATMs. And then the assisted self-service zone for simple transactions through the self-service channels and modern payment methods, to tellers and high-touch engagement consulting zones for more complicated transactions and areas to improve customer service. Just all of that together has to be in place in an environment to offer that seamless customer experience. Banks need to optimize their efforts and costs, though. So where possible in those branches, Kevin, they need to move as many people into the ATM environment or those kiosks or the e-banking and m-commerce platforms for the majority of their customers, and then focus the operations more on the profitable tasks and more on the high-touch customer needs tasks as well. Yeah. But yeah, to iterate those points, just want to reference another great read titled The Evolution of the Bank Branch Strategy and the Role of Technology. This was posted on Willow Tree app by Teresa Salabos. She's the Associate Product Manager, and we learn the following. According to research from Apptopia and Adjust, more than half of Americans, 52%, are visiting their bank's branches less amid the COVID-19 pandemic. And 49% of the respondents said that they'll gladly never visit their bank's branch again. Now, that in itself tells you that there's going to be mass closure of branches. So, yeah, long before COVID made going into branch a high-stake, Aaron, the role of bank branches for consumers and businesses alike had already started its evolution. Digital experiences, both websites and bank apps, were incrementally improving, and slowly and surely, bank customers could accomplish most routine tasks without going to the bank. A contraction in branches was imminent. to close off on that, some other great stats. Between 2017 and 2020, before the pandemic, more than 4,400 branches closed in the USA alone. Yeah, that's probably more branches than we have in our whole country, Kevin. A 5.1% drop. A 5.1% drop from the, wait for this, 85,993 branches that they had in 2017 to 81,586 in 2020.
Wow.
But the overall pace of the branch closures have accelerated since 2008. And Capital One of the USA banks, has led the pack, closing nearly 32% of their brick and mortar presence since 2017 alone. So yeah, not coincidentally, strong investment into digital, closing branches, streamlining operation processes, but really getting to understand the customer's needs in it. And then it's always worth throwing a JD Power study into the mix. According to the 2020 study, the most satisfied retail banking customers use both branch and digital services to conduct their personal banking, while the least satisfied are those who have a digital-only relationship with their banks and do not use branches. So the truth is, branches do still play a pivotal role for many banking customers. And not only are some complex tasks easier to complete at an ATM or with a teller, sometimes the only place customers feel comfortable completing those tasks is in a physical branch. And that's understandable. And I think, again, as banks become more customer-centric, they'll understand what the nuances are that result in customers wanting to come into branches to deliver, to engage in those services when actually they don't necessarily need to. So I think over time, we'll begin to see a bit of a shift in that environment there through trust, through banks really understanding those tension touch points. Will be able to improve on that. So yeah, the branch is often the last stop in the process, not the first. So while the banking process has evolved, the question is, how can the branch evolve to meet the demands of that process? And if customers are going on a journey across digital platforms, banks must go with them and embed that experience into the branches. So yeah, to close on this section, Kevin, we note from the study that the new normal is defined as moving from online to online at branch. And you can see how that has evolved into that statement. And we also read that against many analysts' predictions, the pace of branch closures has slowed down in 2020. For most banks, rather than abandon the branch together, the strategic demand is optimization, deliberately closing branches in some geographies, but opening mini branch cafes in others, and across the board streamlining operations with technology. So yeah. Beyond the numbers and locations of each branch closing, Kevin, the branch strategy must include three key points. So studying, analyzing, and optimizing these points. Experience at each branch, service and value adds available at the branches, seamless digital to branch experience, and the employee's ability to support cross-platform engagement, as well as understanding that any changes in the bank's branch strategy not only impacts on the customer itself, but as we mentioned, in the employees as well. Because as technology really comes to the fore in these branches, the employees need to have new training. They're taking on more complex roles. The technology enablement is needing them to be upskilled in many instances as well. So customers who walk into a branch will increasingly expect the branch employees to deliver an experience that is contextualized, individualized, and comprehensive.
Craig, yeah, I guess, while technology evolution is seen as a must, there is an expectation that focus is always around the customer journey and customer centricity. But as you alluded to in the closing to the section, the impact on bank employees and staff must never be overlooked.
Yep, absolutely, Kevin. Yeah, staff at the core. In fact, I mentioned earlier that the likes of augmented reality can definitely play a big part in the banking experience evolution. But taking staff out of the entire equation is a risk for some banks.
Craig, now that we have some great insights on the role of technology and the evolution of bank branches, is there anything that we can share on Fintech Brands?
Yeah, gosh, good question again as well, because there was a wonderful read on the Mint Studios blog, Fintech Worth Reading section titled 6 Examples of Great Fintech Brands, which was posted just on a year ago, May 2020, and a lovely opening salvo here, which states that the old business model of bigger numbers and more individual sales is slowly being overtaken by a new business model, gaining a customer for life and upselling services. With big data, telematics, and open banking, products can be more personalized than ever. The more you learn about your customer, the better and more tailored your product is. Therefore, the less likely she is to change provider. So what that means is customers are looking for brands that not only sell an excellent product, Kevin, but align with their values and principles. And again, we've spoken about this a lot in the previous shows on brand, because the brands that they use now are becoming part of their own identity, and there's this association with the reflection of their identity in the brands they use. So customers are also looking for differentiation, but there's more and more competition in the segment. So some of the fintechs are offering some really clever propositions in place, but on the other spectrum, just high interest rates and saving accounts, which may not necessarily be a long-term solution. But there's some really great things like constant prize draws to really entice customers to take on the proposition. But in this instance, branding is really important in order to clarify the differentiation from one company to its others. And in this space, three key things really stood out here is education, as I mentioned. Most millennials and individuals find finance confusing or full of jargon. So fintechs take on the role of educating customers. And as I was saying, the minute the traditional banks with staff understand this, they'll hopefully be able to take some of those pain points away and remove that intense layer even more than it is at the moment. Trust. Bank and financial institutions don't have great reputations. So fintechs have been really putting a lot in place to work harder to build trust with their customers. And you can see that trust is definitely achieved through great education. And at the end of the day, customer experience. Younger generations really expect the same level of service they get from Uber, Google, and Apple. And the fintechs, and for some of the Samsung users out there, and fintechs need to offer personalization as an intuitive user experience in the banking space as well. So you can see that the fintechs are associated with the other great technology brands, and those that are offering banking into that proposition really need to be delivering to that intense level of expectation, Kevin. So let me take you through, I think it's just 3 examples I've pulled from a great read entitled from the Fintech Brands, a great read on the 6 examples of great fintech brands. The first one is Starling Bank, which I'm quite well aware of. They stand for transparency and newsletter content marketing. Their current bank account exists on your phone as an app only, and there are no bank branches, and your debit card is sent in the mail. They've got a well-defined content strategy, which is supported by a highly informative newsletter titled The Murmur, and it offers quite broad, diverse content, and they regularly publish user-generated content and feature users who have had success with the app. So really great that they're taking the learnings from their own customers, and they're using that to share and make the experience a lot more seamless, but personal, and making the customers feel that they're part of the process of the bank as well. They've also recently launched a well-received campaign that gives away money to small entrepreneurs in the UK who are using Starling Bank to manage their finance. So if it's not really good high interest rates for investments, it's giving away money to help and incentivize entrepreneurs. The second one is Klarna. They focus their strategy around video and influencer marketing. And this is quite an interesting one because they're a fintech company that allows shoppers to buy products and pay for them later with no interest. So their product doubles as a marketing strategy for merchants to acquire customers and allow them to pay later. Shoppers can buy so as an aggregator platform, the shoppers can buy from the likes of ASOS, Topshop, and other online stores, and they can even try the clothes online before they buy them. So literally, order, deliver, experience, like it, make the payment. You can see how trust is a critical requirement in that regard as well. And shoppers usually have between 14 and 30 days to pay for their orders, Kevin. Their website's quite slick, apparently quite intuitive and easy to navigate. And they've taken a good stance on corporate social responsibility, where you can literally see how they're tracking their climate change impact. And as we mentioned, two shows away, that's really great for millennials. Aligning with those values again, choosing organizations who represent the values that they stand for. And the influencer marketing strategy is a real differentiator, where they turned a fairly boring topic like finance on its head and made it trendy by launching an entire campaign around the word smooth in shopping, where they featured Snoop Dogg and turned him into Smooth Dogg in several videos with attractive colors, random items, and some hip-hop music in the background. And a great success, because the campaigns were then flighted across YouTube, buses, and many online stores. So they've challenged the financial services industry with style. And for me, interesting, they've developed highly appealing video marketing and aligned with a very well-known celebrity influencer. And then the last one in this section is Robinhood. They focused on podcast marketing, and obviously the podcast spectrum is what we participate in. This is why I've selected this. So Robinhood's a platform that allows individuals to invest in the stock market without paying any commission. And they were one of the first fintechs to take the approach of democratizing stock marketing investments to the next level, and an approach that's visible throughout the entire branding. And what makes them really stand out, Kevin, is they've got a daily 3-minute newsletter and a daily 15-minute podcast. And both of these mediums are called Robinhood Snacks, which markets themselves as digestible financial news. Yeah, Robinhood Snacks, digestible financial news. So people can read the newsletter in the morning and then listen to the podcast on the commute home or while walking or going out for a walk. And it's delivering high impact educational content that builds deep trust with prospective clients and existing customers. And again, important to note that podcasting does take a lot of effort to run, but Robinhood has really brought this to the fore, and they've implemented it correctly with the right frequency. And when that's in place, the ROI is unquestionable, and brands literally are in customers' ears every morning, every day. You part of their identity, which is quite sexy.
I love that. Yeah, I mean, it goes to show that considering. I mean, one of the conversations we've had is how important audio as a medium is becoming in your marketing and your marketing approach, and to think that it's down to bite. What do they call it? Robinhood Snacks.
Yeah, Robinhood Snacks. It's brilliant.
A snack of information that you can snack. I mean, I've recently also seen Blinkist. Blink. I don't know if you've seen Blinkist, the app.
Yes.
Amazing platform that sort of like wraps up information in a very small way. But I mean, Craig, this is really interesting. I think it's quite unexpected to hear what people are doing and what corporates are doing out there, and companies are actually how they're actually looking at what they would do to influence their marketing and really tap into their audience.
Yeah, Kevin. We've covered a broad range of content today, and I hope the key difference between traditional banks and what fintech companies are doing is obvious. But at the same time, I hope our listeners see the opportunity for the banking sector when the two sides do come together and play nicely to create that entrenched, seamless customer experience, customer centricity at its best. So, yeah.
Craig, so to wrap it up, what are the key points and tips that we can share with the listeners today? Okay,
so Kevin, to close off the session, I want to highlight the following technologies, because these are the ones that are currently changing and shaping the future of banking globally. But the more we know about them and watch them, the more we're going to understand where the world of digital transformation and banking is going. So referencing an article on the Wilson blog titled 10 Banking Technologies That Are Shaping the Future, as posted by Lippi Bharadwaj, we read that number one, augmented reality. Immersive technologies such as augmented, virtual, and mixed realities are enhancing customer experiences across the board. And the possibilities of implementation of augmented reality technology in the banking sector are only limited by imagination. How's that for you? Though they're still at the very early stage of development. Blockchain, mentioned to you earlier on, blockchain is really the one to watch as a catch-all phrase used to describe the distributed ledger of technologies. And you could think of it as a distributed database with no DBA involved. It allows multiple parties to access the same data simultaneously, and at the same time ensures the integrity and immutability of records entered in the database. At present, leading banks around the world exploring proof of concept projects around various aspects of banking and financial services. 3, exciting robot process automation. So the volume of unstructured data that the bank has to process is increasingly exponential with the rise of the digital economy. This is not just banking transactional data, Kevin, but also other behavioral data that could possibly allow the banks to improve and innovate customer experience. And yeah, there's a behavior bank in South Africa, as we well know, hey?
There is, yeah.
Yeah, quantum computing is a way of using quantum mechanics to work out complex data operations. And it's common knowledge today that computers use bits that can have 2 values, ones or zeros. Quantum computing uses quantum bits that can instead have 3 states, the -1 zeros or both. And this unlocks exponential computing power over traditional computing when the right algorithm is used. So artificial intelligence, the explosive growth of the last decade has seen the amount of structured and unstructured data available with the banks combined with the growth of cloud computing and machine learning technologies. And this has created the perfect storm for artificial intelligence to be used across the spectrum of banking and financial services landscape. API platforms. API banking platforms are designed to work through APIs that sit between the bank's back-end execution and the front-end user experience provided either by the bank itself or third-party partners. And Kevin, this is where the fintech brands are really coming to the fore. The third-party partners is a great innovation space, and this allows the banks to adopt completely new business models and use cases, and experiment with new technologies like blockchain at a low cost. And APIs also help banks to future-proof their system as the front end is much more tightly coupled with the back end. Prescriptive security is increasingly banks are deploying advanced analytics and real-time monitoring and AI to detect threats and stop them from disrupting systems. Hybrid cloud, one of the biggest challenges that the digital age has brought to banking is the need for quick response. And the constantly evolving market that banks are operating require them to be as agile as possible. And they need to be able to provide resources across the enterprise in any time. And this really is where the power of hybrid cloud comes to the fore. Instant payments, this instant need is really at the forefront of the world moving to a cashless society or cashless economy. The customer expectations around payments have changed dramatically. They want customers and businesses to happen instantaneously, and this is really where the payment systems will step in. Again, fintech's playing a strong role in this environment. And last but not least in this space, smart machines. Banks will have to invest in digital engagement to ensure a long-lasting relationship with customers. And remember that customers will gravitate towards banks that are the easiest to work with when they're using technologies and that they have become habituated to. That's the wrap on that side.
Fantastic. Guys, if you want to go and check that out on the website, it's wowso.me. Go and check it out under technology in banking. Craig, lastly, just to wrap it up today, what are we expecting for next week's chat?
Kevin, yeah, the term I mentioned a lot today, augmented reality. I want to look at how augmented reality is shaping the banking sector, very much in a evolutionary space, but also just, what is it doing from a clothing retailer where you actually don't even need to try clothing on. You can stand in front of a mirror. So definitely want to get into picking up on that.
Fantastic. Craig, thank you so much. Thanks for joining me today. Guys, if you want to join us, it's happening every lunchtime on a Thursday. It's the lunchtime marketing segment. Craig Pagely, thank you for joining me, and thanks for today.
Fantastic, Kevin. Look forward to next week.
Cheers for now.
Thanks.